Hi guys, it's Don Rainey here, your Halifax Realtor with Royal LePage Atlantic. And today I am going to do a quick interview with Cyrus Habibi with Premier Mortgage Center. Cyrus is one of the top mortgage brokers here in Halifax. And I want to fire off a few questions to him. So, hey Cyrus, how you doing?
Good, Don. Thanks, man, for having me on.
No problem whatsoever. So the first question I'm going to start with is obviously COVID. How is that affecting the way mortgages are being lent and approved now compared to as they were before?
Well, everything is pretty much the same as it was before. What you are seeing is you're seeing some people who are self-employed having a bit of a harder time depending on the employment field they're in or the type of business they do. Whereas all the banks and lenders do have a general idea of what businesses have been shut down or affected to COVID. Generally, like waitresses, bartenders, hairdressers, any of those positions that have been affected directly by COVID. A lot of the time, people are having issues getting approved because they're currently not working. So that's one of the main struggles we have. But for everybody else who, is a salary or continuing working or working from home, really the approvals haven't changed much. The only thing that's really changed is they're just a little bit more diligent on their employment confirmations up front. So they want letter of employments. They want everything to be very recent. Letter of employments used to be able to go up to 60 days. Now they want them within the last 14 days. So you're just starting to see more due diligence done up front. But for the most part, it's pretty much the same. It's just people who are not actively working right now are definitely having a harder time. But I'm sure everything hopefully will return back to normal, right?
Okay, yeah. So here's a question off of that. Like, what do you recommend people have right now? If I was going to come call you tomorrow and say, hey, I want to get a mortgage, what are the 3 documents I should have on hand and ready for you?
Well, if your salary or your hourly, we want to make sure you have that letter of employment. That's the main. Some banks were okay with not using letter of employments, but now it's you have to have letter of employment, and we need to see your pay stubs, and everything needs to be recent, really within the last 14 days. So really, so the banks can confirm that you're still actively working due to COVID. And then the third thing is just a proof of down payment. So wherever your funds are coming from, whether it's your savings, gift, investments, Nova Scotia Down Payment Assistance Program, that's still active. So that is still there. But those are really your 3 documents: is your income and your down payments, the important part.
Okay, that's good to know. Have you seen like a decline in like new applications for mortgages?
New applications for sure, in a sense that because obviously mortgages or real estate is done usually with a closing date of typically about 30 to 60 days, right? So everything that was put into place before COVID came about was good. So really up until probably June, it's still okay, but yeah, there's definitely been a decrease in like new pre-approvals or people actively looking and writing active offers for, let's say, July, August, or September. So anything that was already in place is fine, but anything new, I'm sure it's not. And I'm sure you can probably speak on the stats of the homes
Right.
listed versus the homes sold, et cetera, right?
So what are rates currently at now? Like, what's your variable rate and what's your 5-year fixed?
So variable's pretty low right now just due to the prime rate being so low. So prime rate went from 3.95, it's all the way down to 2.45. So you're getting variable rates in the low twos, so 2.15, 2.2, somewhere around there. Your fixed
Okay.
rates are hovering right in the mid twos, so anywhere from 2.54 general, maybe a little bit lower, maybe a little bit higher. But I mean, the rates are obviously fantastic. It's just variable versus fixed is going to be a personal preference depending on what you want to do, right?
Yeah. And are you pushing people to or recommending people to stay with the variable rate, or are people saying, "Oh, lock me in. It's so low."
We're seeing a lot of people want to lock in just because the rates are so low.
Okay.
Now, the issue is the discounts off a variable are not that great. So yeah, the rate initially is low to begin with, but if Bank of Canada adjusts that prime rate and they start jacking the prime rate back up, then your spread is going to be higher than the fixed. So you're seeing a lot of people taking advantage of the low fixed rates and just kind of giving themselves that peace of mind moving forward.
Right.
But really, people who are going to go variable, regardless for the most time, are still going to go variable. But it's still a great option. It's just fixed rates are so low and competitive right now that it makes sense if you wanted to lock in.
Okay. Yeah, that's good to know. And so, what are there any programs out there for first-time home buyers trying to break into that like first-time buying and maybe trying to save up for that down payment?
Yeah, so there is still the Nova Scotia first time home buyers incentive.
Okay.
There is obviously the RRSP, which has been around. That's always been around, but they increased the limit to 35,000. So as a first time home buyer, you can take up to 35,000 out of your RRSP, and that's really for whatever you want in terms of home buying, right? So your down payment, your closing costs, maybe if you want to buy some paint, pay off some debt, whatever, that's fine. And the third thing is that CMHC program, where if you put 5% down, they'll match another 5 or 10% down, depending on if it's a resale or a new construction. And they will give you those. It's interest free, but you have to pay it back when you sell the house. So they'll loan you 5%, but you have to, when you sell the home or you pay off the mortgage, that's repayable at whatever the market value is at the time. So it's a good program for some first time home buyers if they want to take advantage of it. But those are still really the big three. Some other incentives are some banks have cashback programs right now. Uh,
Okay.
the rates are obviously a little bit higher if you go with a cashback mortgage, but some of them are offering like a 1, 2, 3% cashback. So it's not. It's a good option for someone who maybe wants money to cover closing costs or whatever it might be. But it's it's the options are there. They're definitely banks are coming out trying to assist people in getting mortgages, right?
And now for the people that have mortgages currently, and then let's say maybe that household is now unemployed,
Mhm.
right? And do you have like some contacts there to help people with, I mean, either deferring payments, and can you talk on that subject a little bit?
Yeah, so deferring payments uh, when all that started to happen a few months back or 6 weeks back, it was an absolute mess just with the banks coming in there and obviously releasing the program up to 6 months of deferrals for mortgage payments. Now we fielded a lot of panic calls when that happened, obviously, and really we're trying to make sure that if you don't need to defer your payment, don't do it because it's not a get out of free jail card. The banks are not paying your payment for 6 months. It's they're deferring it and they're tacking on the interest. So you will have either more years at the end of your mortgage when you go back to paying your payments, or you're going to have a higher interest occur just from the payments that you've deferred. So it's a good program for people who need it. Definitely take advantage if you have to. In terms of contacts, we always really they kind of released the phone numbers right away when this program came out, and they were fielding hundreds of thousands of calls, and it was an absolute mess. You couldn't get through them. So they really started to push everything to online. So if you had any inquiries, there was the emails for customer support, or you can go on like your bank's online banking and try to get something from there. So there was some good changes that happened last few weeks to kind of help people get these deferrals done quicker. But generally, I always say we have contacts for all the banks and lenders that we work with. So if
Okay.
you're thinking about it, we forward that off to you. You contact them directly because you have to kind of tell them your case. It's done case by case. It's not an automatic deferral. So you have to have been directly impacted by COVID, right? So it can't just be that you're still working, but you want to defer your payments for 6 months. It's
Right.
that you've lost your job or your income has been decreased or whatever happens, and now you're in a spot where you're not sure if you can make that mortgage payment.
Okay. Perfect. Um, yeah. One other thing, like obviously people might be inquiring how they apply for a mortgage and that, and maybe you can just tell them how that works. Obviously, you probably can do it all over the phone or by email, I'm assuming.
Yeah, everything's been done through email and phone here recently because you can't really meet people face to face. So it's been fine. But really, the way we've been doing our process is we get in contact with the client over the phone, and then we send out an application and a consent form. They can fill it out, send it back to us with documents, and we can kind of help them with the document collection and all that stuff. So we've really had to take the whole approach to virtual. And then most of the banks have adopted online signings. So we just send out signing packages that can be signed just kind of how you guys would sign your documents too, which is
Okay. Yeah.
Group or DocuSign or whatever it might be. So if you don't have access to a printer at home, for you to print those documents and sign them and scan them back, not everybody has that luxury, right? So
Right.
for the most part, we've been doing a lot of online signings. But in terms of the mortgage approval process, it's the same. It's just we've moved everything to virtual and emails and Zoom calls and whatever it might be, right?
And obviously, I know like the value in using a mortgage broker like yourself, as opposed to just going to my bank. And for me, in my mind, it's like my bank has one program and they're the only one giving me the money, whereas you have more options. So can you speak to that? Like what separates you a little bit from a regular bank?
Yeah. So as mortgage brokers, really our main focus is we can look at what everybody has to offer and with an unbiased opinion, really tell you who has the best rate, who has the best product, uh, because we can see what everybody has to offer. If you just walk into your bank, they can only tell you what they have because it's the only thing they know, right? So
Right.
typically we tend to get better rates than if you were to walk into the bank. We usually get better rates than if you walk into your own bank, just because we're more competitive on our end. We get special offers, deals, whatever it might be. But it's really just coming to us. We handle everything for you. We make the process easy, and we can find a solution that really fits your needs. Because I can tell you a lot of the times, it's not one bank or one lender that's going to work for everybody. So us being able to say, yeah, you know what, the mortgage might get approved here, but it's actually going to be a better fit here, and here's why. And that really helps clients a lot along the way to kind of help them establish those long-term goals, but also really the main goal is get them approved too, right? So
Right.
there's a lot of deals that don't fit at one place.
Yeah, and I know in the past I've sent people that probably weren't in a position to buy at the moment. Like maybe they had some stuff on their credit they had to do, and maybe they needed to save a little bit more for a down payment.
Yep.
And you guys worked with them through that process to get them to the point. So, is that something you're still doing? Like, sort of grooming clients along a process of just 6 months to a year to get them
Yeah.
to that home buying position?
Yeah, definitely. So it's really about working with the clients as early as we possibly can, because we don't want them to come to us when they're ready to buy the house or they think they're ready to buy the house. And then we find out they're still 3 to 6 months away.
Right.
So we always say, get to us as soon as you can. I know it's always a touchy subject when it comes to finances, and maybe you're nervous or maybe you're scared, but telling you the unknown is always better than actually finding out what the issue is. And once we can actually sit with you, determine the game plan, and tell you what exactly you need to do, so when they want to come see you done in 6 months or 1 year or whatever it is, they're ready. They're not, thinking they're ready and then they're still a year out. So it's really go see a mortgage professional as soon as you can, get the game plan established. We'll work with you every step of the way to make sure that when the time comes for you to buy the house, you're ready. Some people take 6 months, some people take a couple years, but at the end of the
Right.
day, it all works out. It will happen. So it's just get in there as soon as you can.
Yeah, one of the things I always get a pushback on is they don't want to go to a mortgage broker because it might affect their credit score. So, can you speak on that when you guys are looking into a client, how that plays out?
Yeah, it's no different than the banks. They have to pull a credit bureau, and so do we. So, but when we pull a credit bureau, our credit bureau is good for all the different banks and lenders. So we don't have to keep pulling credit bureaus to go to a different bank and lender. So really, if they walk into their bank or they come to us, we're each pulling a credit bureau. Their credit will get affected in the same way. It doesn't really affect your credit much if you haven't had 10 pulls in the last 30 days. And really, what we can do is in the long run, it's actually better for their credit, because if we have to take that application from TD Bank and send it to Scotiabank, we don't have to repull a credit bureau. We already have our credit bureau,
Right.
right?
Okay.
Whereas if they were to go to TD themselves and then have to turn around and walk into Scotiabank themselves, they would have to pull two credit bureaus. So it's in the initial phases, it's all the same because we each have to pull credit bureaus, but it's those clients that we have to look into doing it, maybe at a different bank or lender if it doesn't work out the first time, right? That where our advantage is for sure.
Okay. Perfect. I think that's it for the questions I have. Is there anything you want to add that maybe I didn't touch on there?
Nothing really. Everything is, again, banks are still lending money. It's all still pretty much the same. It's just obviously they're doing a little bit more due diligence on the upfront. A lot of the banks and lenders have been really good on the fact that, once they've confirmed your income, once they've called your employer and they've verified everything, they're not reopening files. They're not calling your employer the day before closing to make sure you're still working.
Right.
Obviously, they know there's a liability there just due to what's going on with COVID, but it's one of those scenarios that they're saying that if we're confirming the income up front, we don't want to reopen that file 2 days before closing to find out if you've been laid off or not. So they've been actually really good on that front to helping a lot of people, making sure that they're going to finish and close those homes. So it's really just everything's pretty much status quo. It's all business as usual, right?
Okay. Perfect. All right. Well, buddy, I appreciate your time, and hopefully we'll
Thank you,
see you
sir.
when it's all over.
Yeah, sounds good.
All right.
Thanks.